Jeff Sica is here, part of the all-star coverage of this market move to 20,000. Jeff, welcome back to the program. Good to see you.
Thank you. Good to be back.
Why are people, we've been hovering around 19.9 within striking distance of 20K for days on end. Why this pause before we get to 20K? Are people worried that you hit 20K, the algorithms come in and everybody sells?
Well, first of all, you have two types of people. You have the type of people that are piling in now because they want to be at the party when it hits 20,000. And then you have the people who have been at the party and are ready to go home, and they're using 20,000 as their reason to sell. So there's that conflict going on right now. And I think it's to me, it's very important to be enthusiastic about what's happening, but it's very important to look at the fact that the next leg up is going to require seeing some of these policies that everybody's so enthusiastic about start to work.
Now, here's my question. A lot of our viewers are looking in and saying, oh, gee, should I put some more money into the stock market right now, just as it hits this high, near 20,000, put money in now? Because a lot of them have got to make that decision on January the 1st. Where does their 401k money go? I mean, there's a big influx of money on January the 1st. Where do they put it? So give them some advice.
Well, they shouldn't, and here's the reason.
They should not put it in the market?
No, because if they're not in it at this point, if they're not in the market, because a lot of this, what they call window dressing, the fund managers, they don't want to be out of the stocks that do real well. So at this time of the year, they want to make sure for the end of the year they're able to show that they own the top performers. Now, the regular investors that are not in this or aren't in this or aren't in this as much as they think they ought to be in it should really think twice, because, think about this, a 6% move and a 9% move from the election, there's always going to be a pause. So maybe investors should take some time and let there be a pause and then maybe start to deploy capital. How's that?
Jeff Sica is trying to calm me down. Here I am gung-ho to hit that market hard, 20,000, here we come. All right, let's peek. Now, Jeff says, wait a minute, hold back a minute. Don't just jump into this thing. And you say what?
I think there are some sectors that are still very attractive. We've seen this push.
Wait, don't give me that
No.
jargon stuff.
Oh, you mean, generally speaking, should we be going into the market?
Address Mr. and Mrs. Smith, who are watching this program and saying, should we get in, yes or no?
Well, actually, Mr. and Mrs. Smith are getting in. That's who's actually driving this market, is the retail investor has really been coming into this market in a big way. So congratulations, because you're ahead of the institutions who are still trying to figure it all out. But I think, look, I'm an optimist. I think we've got a lot of power behind the economy, a lot of untapped resources. And I don't just mean oil and gas. I mean labor that's not at work. Factory utilization is still quite low. It's around 70% in this country. We have room to grow.
We've got this fancy graphic that we've spent a fortune on creating, and we can't use it unless we hit 20,000.
Oh, rats. That is a good reason.